let's get more on the markets now with Richard Perry, who joins us from London. He's an analyst at Hantec Markets. Good to have you back with us, Richard. So the British Prime Minister Theresa May is currently taking questions in the UK Parliament. That's ahead of the so-called indicative votes on alternative Brexit strategies. What are investors hoping will come of that?
I mean, that's a really good question because, I mean, there's no one that really can answer that question in the fact that what is actually going to drive the positivity coming back into the UK economy. Sterling should be supported by a softer Brexit. A degree of certainty coming back into the market would also help, but certainty is not something that we've got on Brexit at the moment. You've got all these 16 potential indicative votes today. They're going to be whittled down to maybe a handful tonight, and then MPs are going to choose maybe a couple to move forward to debate on for Monday. But how this process really pans out is really uncertain at the moment, and it certainly looks like it could be moving towards a softer Brexit. But ultimately, no one knows. All options are still on the table, and that's why we're seeing sterling, which is just chopping around at the moment.
Let's look at the US bond yield curve inversion now, which is a very technical sounding phenomenon. But I guess the important point is that such an inversion has occurred pretty much before every US recession for the last 50 years. How worried are global markets about that?
Well, as you say, I mean, the last 7 recessions have been signalled by the 3-month Treasury yield going above the 10-year, so the spread turning negative. It doesn't actually have massive implications at the moment because there's this big distortion that quantitative easing has made arguable that it's actually depressed longer dated yields by around about 100 basis points perhaps. So maybe not so much in the Fed sort of expecting around about 25% possibility of a recession. But there is this increased concern that the global economic slowdown is hitting through global markets at the moment, and you're seeing safe haven plays which are benefiting the Japanese yen, gold, even the dollar in this scenario, even in the midst of a yield curve inversion, is benefiting. So we're seeing the safe haven assets that are benefiting. Indices are not playing out well in this scenario, so it's an interesting move that we're seeing where risk appetite is being depressed at the moment by this global cyclical slowdown.
Okay, something that we'll all be watching very closely. Richard Perry in London, thank you as always.